Let's go to CommSec for a look at the markets. Tom Piotrowski is live with all the details. It might be a problematic beginning again, Tom.
Well, Pete, it's not without precedent. The last couple of days have been a heady mix of challenges for investors to navigate, and Friday was no different. We saw the general trend as being down for most asset classes. So stocks were lower on Wall Street at the end of the week. You had the S&P 500 down 1.3%, the Nasdaq down about 1.5%. So where the US particularly was concerned, there were weaker bank outcomes, which weighed on the KBW bank index. It was down by about 3%. You had concerns, obviously, around the escalating issue in the Middle East, which saw a lot of pressure to bear on markets just broadly. And then on top of all of that, you tended to see the concerns about rising interest rates, which is why the interest rate sensitive sectors were under a fair bit of pressure as well. So that will be firmly in focus as we start the new week. The futures are pointing to a decline of around 0.9% for the ASX 200 this morning. So the geopolitical situation is one thing. We have a very important inflation measure midweek, the quarterly CPI figures, at a time when the RBA has said it's got little tolerance for a slow return of inflation to the target band. Arguably, you could say that there's a slight reframing of the urgency that the RBA has tended to show in recent times. And then on top of that, Pete, at the weekend, the Chinese have undertaken the review of wine imports, which could prove beneficial for Treasury wine estates. That stock will be in focus this morning as well. So there's a lot going on at present.